What's up, guys? This is Ty Zen, and with me today, I have some special guests from the cryptocurrency community. We have here the Honorable Grandmaster, legendary, world-renowned, LeonFood.com. Say hello, man.
Hi there.
All right. And then we also have Micah Spruill. He's one of the advisors to the Particl cryptocurrency project. Say hello, Micah.
Hello.
All right. And then with us, joining us live from South Africa, we have Rhino Matti. He's the lead core developer for the Particl project. Say hello, Rhino. All right. Then we have in the lower video screen here, Mr. Smiley, Paul Schmeitzer from the city of Columbus, Ohio, which is located in the northern part of the United States of America. He is the communications manager for the Particl project. Say hello, Paul.
Hey, guys.
All right. So really quick, guys, to summarize what we've come so far. In the first video of this series of Particl for Investors, in the first one, we talked about the background, the history of Particl. In the second part, we talked about the technology and the need and the necessity for that Particl technology. And then we talked about the value of the Particl project, and Micah gave us a estimated valuation of what he believed Particl, the potential for Particl, right? And then we talked about in the last part, in part 4, the Particl community, the technical team. We talked about the business and marketing team, and then we talked about the advisors that they had. So now in this part 5, which is one of the most important parts, we want to talk about the money to fund the Particl development, right? Without funding, no cryptocurrency project is going to last very long. So how is the project going to be funded, right? You want to talk about just give us, the audience, a quick summary of the seed round and the primary round fundraising?
So what we did when we met together before determining, how to establish and create the project, we decided that the most responsible thing to do would be to kind of mimic the way they do in legacy markets in the real world, like with VCs, where if there's not much of a product and the project is still in its infancy, then you don't go out and raise $5 or $10 million. That's just not how you attract serious capital. And what you often see with projects that get massive valuations early on.
Such as the Waves platform or the Lisk platform?
Yeah, sometimes when you do that, and I won't say whether that was right or wrong, but when you do that, you value your project really, really high. And so what you'll see sometimes is down valuation once it hits mainstream market. People will sell their tokens, try and profit take. And what we were trying to do with this is basically raise the bare minimum amount needed to fund the project for 6, 10, 11 months, and do it in a way that did the least amount of dilution. So if you have a $10 million project and you want to raise $1 million, then it usually follows that you're going to need to dilute people by about 10% because you're going to have to sell 10% for the 1 million of the 10 million valuation. So what we want to do is we wanted to raise as little as possible that is needed.
The bare minimum.
Bare minimum, while the valuation of the project is still relatively low. And that way we didn't have to create a bunch of new tokens, 10, 20, 30, large amount of tokens. We just wanted to create the bare minimum amount that we needed to fund the project. And then what happens is when you release your minimum viable product, such as the beta release to the marketplace, and you get a legal structure in place, things that are kind of necessary for running a professional, in some ways necessary for running a professional project, like having a product, having a legal structure in place, having a team that's hired by some central authority. Those types of things will attract more serious investors later on. So what we want to do is get the money in place that we needed to fund it for the foreseeable future, get the product out there, get the legal structure in place, and then as we could show an auditable track record saying, we said we were going to pay these guys this much, we said we were going to spend this much on our budget for PR and marketing, all these things that can build trust with the team and the community. And so they can go to the contributors and the donors that put in the money to fund the project and say, hey guys, we did exactly or nearly exactly what we said we were going to do over the last 9 months. And now we want to do a primary raise now that the project is, say, gone from a $10 million valuation or $15 million valuation to like $30 million valuation. You expect that as you do what you say and you get the product out there, the valuation will follow. Sure. And so what we would do then is you're selling a similar amount or releasing a similar amount of tokens as the primary round, but now those tokens are a lot more expensive. Sure. And so that at that point, you're bringing in more serious capital from investors who they wouldn't bother investing in a project that's only raising $250,000 or $500,000. And they say, oh, they're raising $5 million or $10 million. And now they would come in as a larger investor and say, hey, they've done, I do my due diligence on them. They've done what they said they were going to do. And now I'm more comfortable as a serious investor or donor to contributing to this project. And so that's why we broke it up into two. You want to plateau at where you're at, and then you do another round instead of.
So we'll get to that in a minute when we go back to it, when you go into more detail.
Right.
But let's talk about what happens to the shadow cash tokens that's collected for this seed round. Yeah. All right. So I'm going to direct this question towards you, Rhino. Why not do a proof of burn like Counterparty did instead? Why do this exchange token system? Because when we consulted with our one of our colleagues and advisor, Charles Hoskinson, the former co-founder of Ethereum, he was asking us, why are you guys doing this? Why not
just burn it?
Why not just burn it?
Yeah.
Okay, well, it's a proof of stake coin, so we obviously need to keep the network alive. So first of all, we wanted to get the coins to make sure that the network's alive during this transition. And now, since we've gotten more than 51% consensus, then it's obviously clear that people want to move over and people want to transition. So now the actual shadow cash blockchain is no longer decentralized. So there's no use for people to carry on with it.
Okay. Right. And explain, why did you guys accept only shadow cash tokens and not other coins?
Why couldn't they buy a Monero to buy?
Right. So the reason for this was twofold. One was a legal reason, and one was a team choice or a community choice. And so the reason for accepting only SEC goes back to what we've talked about in a couple of the previous sessions, where we were trying to solve this issue of migrating to a new chain and doing an ICO or something similar. And the legal counsel we were consulting with said, well, there's now regulators are looking at these ICOs and saying, you're creating value out of thin air and selling these things that are arguably are marketed as securities.
Yes.
That's what it is when you print security or stock or tokens and you're just selling them. You're creating value out of thin air, and regulators are really looking at this and saying you can't do that. And also for tax reasons, you just created all this value out of nothing, and so it can really come back to bite you for taxes depending on your jurisdiction. And they said the safest and cleanest way. And we've had people argue saying, well, we don't like how you did that, or we don't agree with that. But the problem is you have to work within the legal system, and you can't just say, oh, they did it last year, because the whole community, the crypto community and the whole space is rapidly evolving. And the safest thing for longevity purposes and for the safety of the team and the community is to do what your legal counsel advises and stay as far away from, kind of be above reproach and stay as far away from any potential legal pitfalls. There are some where you can kind of dance around and it's gray area, but we didn't even want to kind of go there. So what they said is if one of the cleaner ways to do it is mimic the network or fair distribution of another network. And there's other coins that have done this where they say, if you can prove that you have this token or you submit this token, then we will give you one back in return. And so what you've done is you've mimicked an already provably fair distributed network. People have mimicked the Bitcoin network to do this and other networks. And what we wanted to do, instead of just mimicking Bitcoin or one of the others and creating Particl and saying adios to the shadow cash holders, not only would that destroy, that really hurt the community, it would hurt ourselves as holders as well. But we wanted to, the second part of this, we wanted to give SDC holders the first right of refusal to say what you hold is a ticket, and we value that ticket, and we want you to have say on whether or not you want to participate. So if you believe in the vision and the choices of the team, then you have the first right of refusal to participate. If you choose not to participate, you can go to the market and sell it. If you do choose to participate, wonderful, bring it in, and we'll give you one Particl in exchange, or there's a bonus incentive structure to it as well. I won't get into it. Sure. But there's ways that you can contribute to the project above and beyond just submitting your shadow cash. Okay. And that's the reason we did it. It was a legal issue we were running into, and we wanted to be as far away from that as possible. And it was also a preservation of community to say, hey, we value the network itself. We wanted to adopt and kind of absorb the value that was already there with Shadow Cash and bring that onto the new one. So any guy with Bitcoin or Ethereum, you can't just come in and do it. It says you need to go source the SDC first and bring it to us.
Sure. Okay.
Okay. And then talk about the 15% dilution. I think this is for Rhino.
Oh,
right?
So I can answer this.
Okay.
Yeah. So anytime you're raising capital, there has to be a sacrifice of the network.
Sure.
Just like in stocks, when you have a million shares outstanding or a million shares, you can't just say, well, we're going to have investors give us money. Well, what are they getting in return?
That's right.
And so you have to create additional shares in order to give them something that they're going to get back in return. In this case, with cryptocurrencies, and in order to be legal, it has to be handled in a donation setting where you're getting a token in exchange for donating tokens, right? Because you're legally not allowed to be an investor and expect returns. So what we've done in this case with the seed round is we created an extra 15% tokens. And for that percentage of tokens, you can contribute, you can donate in Bitcoin to get an additional 15% in Particl. And that's where, if you go to the main page, you can see a total contribution amount with the milestones we've hit. And that's where the 15% additional tokens have gone to pay for.
And when will this happen?
So this has already happened. Like you'll see the additional 15% tokens on the Particl network that it mirrors the Shadow Cash network plus 15%. And so on the Particl token, the total outstanding shares or tokens will be 15% of that greater than Shadow Cash.
So this is already
it's already baked in.
It's already baked in.
Right.
Okay.
So it's already hard coded into the software?
Yeah. So on the Genesis block, there'll be an additional 15% of tokens created. Okay. And for that addition, that dilution, you're getting a whole suite of additional features, such as a brand new project, double the size of team, full-time members, professional contributors, advisors, better branding, and there's actual marketing strategy in place with PR and marketing, a legal counsel. You're getting the minimum viable product, to beta.
So
there's
it's not
all
just
these features.
So it's not just a 15% dilution for nothing. There's actually a lot of value that you guys are bringing into the
if someone
project.
said if it is going to cost you 15%, I would say take it, because I want all those things. This market, the Particl project, is going to be what Shadow Cash could have never done. Just professionally and with capital, I would gladly take that, because in other projects that I've done, participate in ICOs and things, I'm looking at where the team or whatever, the project takes 15% or 50% of the tokens for themselves, or 40%
without any additional value added.
right, because it's just they're saying here it is. These are the terms, either play or don't play, and so the terms, we try to be as fair as possible to where the team is taking as the bare minimum amount that they need to fund the project, and that's what we want the community to see.
Okay, so basically, because you had a question about if it was hard coded into the software.
Yeah,
right.
I did.
So
I
for
was wondering how that
so
was
for the seed round, that's already in the Genesis block. Okay. When we do the primary round, we expect it to be around a 15% dilution. That's the current plan.
So are these tokens just going to be issued to the foundation, the
yes.
Swiss Foundation?
Yes.
Okay.
So in the future, we're expecting about 9 months into the future, an additional 15% of tokens will be relinquished to the foundation, and the foundation will take those tokens under the terms and conditions that they've shared with the community and the current donors, and say, hey, we've delivered on the minimum viable product, the beta release market, a public release to the community, and the establishment of a legal structure of the nonprofit Swiss Foundation. Once we've done those two things, the team will then say, we're going to take the additional tokens that have been released to us to do a primary round, where they would then, with a much higher valuation, sell those, in exchange for donations to the community and any new contributors, donors that would come to the table and say, hey, I want to be in this project now. Now that it's proven itself, it has a track record, et cetera, all the things that we're going to show over the next 9 months.
Yeah.
Then you have new money come in, and maybe current money come in, and they would be the ones purchasing those additional tokens, and that would fund the project for an additional 3 to 5 plus years.
Okay.
So that would be the purpose of that. So we just want to responsibly grow into that.
Okay. Now, There was something that when I looked at the Particl.io website and I was seeing how many people were contributing to your project, I noticed that the number of participants, and I just want to make a note here, right? Because I'm sure that other investors out there watching this have the same thing, right? How are the number of participants counted that are participating in the Particl exchange program? Because when you look down the blockchain, the Shadow Cash blockchain, it shows that there's thousands of transactions in there. So you guys counting it by the number of transactions that went through? Because if that's the case, there's thousands of participants. But if you count the number of accounts that signed up to participate in it, the email accounts, then that number will be significantly lower.
Right.
How are
I
you
think
guys?
Rhino can answer that. I think it's based on address.
It's the amount of people that have registered and sent in SDC.
That's why it's not. There aren't even 1,000 participants. If you see, I think it's like 900 something today.
Yeah, so
it's
they have to sign up for the account and they actually have to send SDCs in there. They can't just sign up. That's not counted as a participant.
Sure.
Okay, all right.
Okay, good.
All right. Okay, so let's talk about the seed round here. You summarized earlier the difference between the seed round and the primary round. So in the seed round, you have 3 milestones. Talk about what the purpose of each milestone is for and what that money is going to be used for.
Right. So we've touched on this a little bit, so I'll kind of go through it quickly.
Yeah.
But basically, milestone 1 was the bare minimum needed for the project to be viable. If we didn't hit milestone 1, then it obviously meant that the community wasn't on board and that people just weren't supportive of the vision, carrying out the vision of the Shadow Project in addition to all the new features with Particl.
Yeah.
So if milestone 1 wasn't hit to cover salaries and legal expenses, then it wouldn't have been viable.
Okay.
Fortunately, we blew through that one. People, we've seen over 51% of STC be converted.
Yeah, it's like over 60%.
Yeah, now it is. Yeah. But that's a great amount of consensus by the network. There's obviously we're never gonna have 100% because there's coins that have been unpurposely burned, lost, hard drives crashed, things like that. So you'll never have 100% consensus. But reaching that 51%, we think is a great milestone. It also shows, majority consensus and some consensus to the point that other projects that have chosen to do transitions, they haven't even had that much consensus. But reaching milestone 1 was exciting. That covers salaries for the next 9 to 10 months. It covers the legal expenses that we're incurring not only before we've done this transition, leading up to it for legal consultation, but also afterwards to get the foundation and everything set up that we're planning to do. And then also the business consultation expenses that led up to the Particl project. So that was milestone 1. Milestone 2 will allow for additional developer onboarding. Rhino and the team have been, they were interviewing people, looking for people, and they found a really competent developer that's going to be helping out. I think he starts pretty soon, right, Rhino? Yeah. So that's really exciting. I mean, you're going from the Shadow Project, which just had a couple of guys volunteering, to now full-time developers and an additional new developer. And that's not going to stop. We're going to keep finding more people as we raise more money. And as it goes further in the future, we're going to be adding as many people as we can afford. And then obviously the professional PR and marketing budget. We funded out of pocket PR already going on right now, but while the funds are not available. But this is going to allow, now that we've hit milestone 2, we're going to be able to ramp that up and really start increasing how much we're pouring into marketing and PR.
Okay. And talk about milestone 3, the 750,000.
So we're inching into milestone 3. It'll be great if we hit it by the end. We've still got 2 more weeks to go. Halfway through, we've done milestone 1, milestone 2. So, milestone 3 is not far out of reach. And what this would help us cover, and this would be in the next 9 to 10 months as expected, would be some sort of third-party code audit so that we could have an outside group come in. It's not saying that there's no problems with the code, nothing. We've seen groups where they've had code audits and they later found issues. This isn't a foolproof thing, but when projects can do code audits, it at least has a second or third or fourth set of eyes to just look over things. And I think that's a responsible thing to do. If it doesn't happen because we don't hit milestones 3 now, it's going to happen at some point. That is a huge priority on our list, but we at least got to make sure the funding is there. It's very expensive. So that would maybe come after the primary round once we had the funding from that. And then we also really want to open up a grant with a university We're talking to a few professors already right now in the computer science departments, and these guys are cryptographers by profession. This is what they do. So we would be basically hiring 1 or 2 cryptographic advisors if we can get to this milestone. So yeah, that's the plan.
Okay, now talk about the I know you summarized the
Yep.
seed round versus the primary funding round earlier, why are there 2 particle funding rounds? Why not just do one just like everybody else is doing? You mentioned about the legal reasons, right?
Right.
But talk about why you guys are
Yeah, so
separating it.
I've touched on this a few times, but what happens, like if you look at, again, these legacy markets, markets like the venture capital world, private equity world, the stock market.
What would have happened? I think the question is, with the environment that we're in, you could have just gotten 5-10 million right now.
Yeah.
We believe.
Possibly,
okay?
yeah,
We
yeah.
believe. And what would have been the repercussions of that if you had done that?
The repercussions would have been higher dilution to the particle holders. I mean, we'd have had to give up a lot more of the network, like large dilution. And I think that also sometimes you can overshoot your valuation when you do something like that. And so what will happen is when you go to market with these new coins where you've raised $10 million, if you don't have a product out or any sort of legal structure, people might just decide they're going to do a quick flip or a dump and then just move on. And that's what we don't want to do.
So you're trying to protect your investors.
We're trying,
The early investors that's willing to take the risk.
Yeah, the community, and the donors and all those people. We are really trying to be responsible with this. Because if you down round later, like when you overshoot your valuation, it can take a long time to recover from that. Whereas if I'm a crypto investor and I come to the table and I look at, like, I compare this project with this project and I see that they've just gone, once they plateau, then they raise, they plateau, then they raise, and do it in a staggered method versus just raise 10 million up front and go. I understand this is great if you have a team of like 15 scientists and you have a huge budget. I mean, when you need to raise that kind of money, that makes total sense. But the market is expecting a product. Like you can't just raise 10 or 20 million dollars and then put it off till next year, or not even have a white paper. I mean, it's insanity.
Now, you guys are the first ICO or token exchange it's not an ICO, but it's the first
token exchange.
Token exchange program or new project that we've covered that is doing it in this manner, where it's split up into a seed round and a primary funding round, which I believe is good to protect the early investors that's willing to take the risk. Because I want to see that you guys are show me your product, show me something before we give you more money.
Because I want to see how you're spending the money.
Because like we did when we invested into the LISC project, they raised a bunch of money, and for nearly a year nothing happened.
There's very little.
There's no white
very
paper.
little, and then people were dumping their tokens and everything. And then
they're just now coming. They're still not back to where they were on launch day.
So that to me, looking back in history, that was very, very risky for us to do that, and for investors to do that. This, it's a little bit less risk, because we know that, hey, if you guys can't even do the first 2 or 3 milestones and complete them, you don't deserve another $5-10 million. Right? So prove to us, to the investors in the community, that you're able to take a small amount of seed money and go do something with it before you go
the people
ask for more.
That raise all this money with no product or anything, they're just, it's vaporware at that point, and it's just marketing. All they've done is they have really pretty advertisements and announcement threads. That's it. And that's not going to last very long.
Okay, so to wrap, anything else you need to add to that? There was one more thing that was on my mind about this seed round, the primary round. When you guys do this, right, was everyone on board in the community to do this? Or was this just something that
the lawyers made you do? Or
was the community happy with doing this?
We had kind of split opinions on that. And the thing that we had to keep trying to voice is I mean, this is how lawyers are everyone's like least favorite person in the process. It's like they always tell you what you can't do, but they're doing that for your protection. And so there were some people that voiced their opinion saying, I don't like how this is done. And in some ways I said, yeah, I don't either, because there were constraints, but some things are necessary. And they're necessary in order for, you've got to look beyond 1 or 2 weeks or a few months out. Cryptocurrency traders have a terrible habit of expecting instant gratification, and they're not willing to see the bigger vision. And when it comes to legal things, especially for the team and the project, you have to be able to take in the legal considerations. So with that said, there were people that were upset saying, you know, they wanted like massive speculation and they wanted the best deal possible. They wanted all these bonuses, and that's just not how it works. It works right now because everything's in such a boom, but I don't want to just try and merely take advantage of people, you know, free money, and do it in a way that's risky to the team later for legal repercussions. So there, you know, it's great to get feedback from the community, but at some point you've got to make a executive decision as a team and say that's not how this is going to work, because it can't work that way. So we had to work within, you know, those confines.
Okay. So thanks for watching this video, guys. For more information about the Particl project, go to www.particl.io and look at their project. And we'll look forward to seeing you guys in a future video.